For some individuals, they look at this, especially when I'm sure there's a quote that I can't think of right now, but during hard times, there's great opportunity, right?
Mm-hmm.
To overcome, to educate yourself, to be able to grow, take advantage of some of the ways the market has reacted to it. And there's a lot of people that, as my son will now jokingly say he owns a percentage of the New York Rangers because he bought stock today.
Right.
Wake up, it's time to rise. Talking money with sharp insight. Jim and Ryan here to guide. Mastering the money ride. Saving stacks and planning dreams. Living large by honest means. Tune in now for the schemes. Breaking down financial themes. Money mindset every day.
I'd like to welcome everyone to the Money Mindset Mastery Podcast. I'm your host, Jim. Joining me today is my co-host, Ryan. Ryan, how are things today?
I'm doing great, and I guess happy belated Canada Day as we squish between two countries' birthdays. I guess you decided, let's talk about the most important thing between our two countries right now, tariffs.
Yeah, well, we're going to be talking about the triple T's, right? Tariffs, tensions, and trust, or lack of trust, right? And we're basing it on an article that recently we came across in the wealthprofessional.ca. And there's a bit of research that they've done. And what they're finding right now is more Canadians are turning to financial advisors for financial advice. So we're going to kind of break down why that is and why you might want to consider turning to a wealth advisor, financial advisor, certified financial planner, basically a financial professional, right? So why don't we get into it right off the bat? Hey, Ryan? Why not? So right now, I guess the big story is tariffs causing a lot of tension, a lot of fear for a lot of people. There's a lot of uncertainty. And what I will say is the markets don't like uncertainty. People don't like uncertainty. And it's been a bit of a roller coaster ride, don't you think?
Absolutely. Especially when it comes to the uncertainty, obviously it comes down to the psychology of people and really emotions. And that's really how the market is driven. We are human, and the market is driven through the human psyche of emotions. So often when it comes to the tariffs, and I don't know if we want to back up because we haven't explained tariffs, and I don't know. A lot of people have gone through and tried to explain tariffs, but essentially tariffs are a tax on goods coming in and out of countries, I guess, simply explained, right?
But who pays it, right? Because I think that's a misunderstanding right now is, for example, the American government right now is placing tariffs on, let's say, Canadian goods. So who pays that tariff? Who pays a tax on that tariff?
Well, ultimately, and we do as consumers, we're the ones who pay the tax because the
again,
companies that are
let's go in context here, right? So basically, specifically, America, the American government is placing tariffs on Canadian goods. So you said we consumers, but we're Canadians. So we Canadian consumers are not paying that tariff. It's the American consumer in this example that is paying the tariff, right? So what ends up happening in that situation is it becomes an inflationary situation, if I'm using this as the example, right, for the American people, because now they're going to pay 25, 30, 50% more for that product. And why is the American government placing those tariffs? What are they hoping is going to happen?
Well, what they believe is going to happen is that more of those companies will choose to build within the United States, just as Canada would like more companies to build from start to finish. But the reality is the cost of making those goods is often cheaper because the infrastructure has been set up in those countries. And I know the best example, and another side note to all of this too is different tariffs are being placed on different goods and services depending on what it is. There's lots of other underlying agreements, but I guess the best, easiest one for us as Canadians is that when the US government puts a 25% tariff on a part that's made in Canada, say that part is $100, it's now $125 for the US citizen who's going to buy that item. It's making things more expensive for them, just as Canadian government will then reflectively try to equalize that and putting tariffs on the same thing. It is now going to cost us 25% more to buy that good. And again, the big economic wheel that it is, again, there's an underlying is trying to bring jobs back to Canadians or Americans. More jobs means more money for the economy. But if the infrastructure is not set up correctly, it can be very costly in the beginning. So I think this is the endless circle that will forever. And whether it works in some industries and doesn't work in others, I guess we can only see. Something I learned a couple of weeks ago too. A majority of countries, especially the United States of America, they relied on tariffs for a majority of the money going into running the governments, especially when tariffs are coming over from Mother England at the time. But it wasn't until the income tax and other taxes were quickly layered onto that the tariffs slowly started to reduce and fewer tariffs were being impacted or as an overall amount of money that the government was collecting. So that was an interesting thing. I found it 2 weeks ago. So
yeah. So tariffs.
I slept through that part during economics classes. So.
Yeah, no. So tariffs started to drop, I believe, after World War One, where when income taxes were introduced, and so that was a main way of most governments to generate revenues for their countries. What the hope is, to your point, the American administration, they're hoping that if, for example, you have widget A and widget A is a Canadian widget B is an American widget, and assuming both have the same cost to manufacture, that the American consumer will look at widget B, the American widget, and will buy that one for a couple of reasons. First, because it's made in America, but secondly, most importantly, because there's no tariff on it, it's going to be cheaper. So naturally, the American consumer is going to go for widget B, just like we're kind of dealing with, groceries. And one of the things that I like to eat, which I'm not supposed to eat, is beef. And we definitely haven't had a lot of steak over the last 12 to 18 months because it's gotten really expensive. Recently, however, Carol's every week she does the groceries for the house, and she's coming home with, I believe it's Australian beef. And she would say to me, she's like, why are we selling Australian beef here when we have good old Canadian beef from Alberta, like it's grade A? And that's the comment I made to her was, well, it's because it's not tariff related at this point. It's more carbon tax related. So even though there's a consumer carbon tax that's been removed from the consumer, it still applies to farmers and industrial. And feed is still very expensive. And there's so many things that have raised the cost of the beef that it's just cheaper to import it from somewhere else and buy that beef from another country, right? With the tariffs, similar thing is, again, if you have widget A and widget B, and it's cheaper, widget A is cheaper to manufacture in another country, people are going to naturally buy that widget. The American administration is saying, no, we're going to kind of not equalize it, we're going to give an advantage to the American manufacturers. And that's why they're hoping that manufacturing will come into the US and there'll be less need for them to import product from other countries. The other reason why they're doing it, and I'm not saying that they're right in doing this or wrong or whatever else, but another reason why they're doing it is we'll use automobiles for example. The Americans import a lot of Japanese vehicles into the American economy, but yet the Japanese don't really import any American vehicles into their economy. partially probably because the Japanese vehicles are so much better, more reliable, and more efficient. But that's one of the things that Trump is basically arguing, saying, well, hey, we're bringing in all your vehicles. Why aren't you taking any of ours? Right. To kind of level off that trade on the vehicle side. So the bottom line is that with the tariffs, again, there was a misunderstanding because I heard people say, well, no, the country that's getting tariff, they're the ones paying the tax. No, they're not paying the tax. It's the consumer of the company that's charged, or the country that's charging the tariff, that's going to pay the tax. However, why is it a problem for the Canadian economy that the Americans are placing tariffs on our product? Can you answer that?
Well, it creates a lot of uncertainty for all of us. And again, as we continue to explain and different networks try to explain and understand without getting into a large debate, the uncertainty really affects our markets and how people see whether it's a good investment to go through. Which again, when there's uncertainty in any market, it often causes stress for people, right? So that increased financial stress on, how does this help or affect my goals, especially for a lot of Canadians looking to save for a home or live day to day or save for retirement. That financial stress, and again, it's one of the things that the article pointed out too, you know, can lead to emotional decision making, right? And without the right guidance, there's often a shift in people's behavior in these turbulent markets, right? Tariffs obviously being the conversation that we're having today. But because there's turbulence in the market and uncertainty, people make emotional decisions, which often lead to their goals not being reached, their finances being kind of in disarray and worsening, and becoming a worse financial situation. So I would say, like, those are some of the impacts that I've seen with conversations with clients, conversations with people on the road, and really it's a psychological game that is being played with people. But the more informed, that's why we do this podcast, the more informed people are on this decision making and being able to reach out. Our clients are reaching out to us just to have touch points, right? Let's
Yeah, I
truly
think you're talking
understand
about right
how that.
now. I think right now, Ryan, you're talking about high level. The question is having tariffs on Canadian goods. What is the immediate impact? So I do understand what you're saying in terms of the market volatility and the uncertainty and all those things. But why is there that uncertainty and market volatility and fear and anxiety? The reason for that is the American economy, the American market is a huge market. It's 10 times the size of the Canadian market. So if a Canadian company is manufacturing widget A and 80% of their sales are from the American population, and all of a sudden there's a 30 to 50% tariff on the Canadian widget, demand drops significantly. So now there's less demand for that Canadian widget because of the tariff pricing increase. So now what that means is they're manufacturing less of that Canadian widget, which means if they're manufacturing less because there's less sales of the widget, now jobs are impacted. And that's where the anxiety comes in, right? Because people are now uncertain in terms of, will I have a job in a month from now, because of the impact of the tariffs on the Canadian economy and the Canadian manufacturing or whatever it might be, right? I have clients in the film industry and TV industry. They've taken a
Mhm.
beating over the last few years between strikes and whatever else that have happened. And I had a meeting recently with another client who's a writer in the industry, and the first question I asked her was, "How are things? How are you impacted with the tariffs in the film industry that Trump is? I don't know if it's been proposed at this point, or if it's put in place." And she said, "It's been a noticeable impact." Because again, no one wants to make investment with that level of uncertainty, right? So that's a trickle effect, and which leads to all the other things that you talked about people being, concerned and afraid and not knowing what the future holds because of these impacts. And in saying all that, one of the stats that we're going to talk about is, so 36% of Canadians who were polled fear tariffs will worsen their finances. So I know people who have homes for sale in the Hamilton area. That market has been a fairly dead market. A big reason for it is there's a lot of steel manufacturing there. Well, now with the tariffs on steel, those individuals are concerned about buying a home, upgrading, doing any of those things because again, they don't know if they're going to have a job in 3 months from now, right? So that's a significant number of people who right now are concerned just because of the tariffs themselves. Now let's talk about the JD Power survey. So in the JD Power survey, 31% of self-directed investors are now seeking professional advice. This reminds me, so this is a bit of a trend that I've noticed, and I'm going to share a personal example. In the late 90s, when I was in the business and everyone was chasing the dot-com bubble, and I remember as a fairly new advisor, I thought I was going to be out of business myself because everyone that I knew was opening up a self-directed account. It was an account that was offered through the big banks. They were fairly inexpensive, and people were just they were investing on their own, making their own decisions, right? So that's where the DIY type of investor kind of started. And I remember as a young advisor thinking, no one's going to need me anymore. Like I'm done. I'm out of business because of the self-directed investing platform that people were getting into. And I recall, and I've shared the story before, playing hockey with my buddies, in the change room, many of them talking about taking out money out of their homes and buying Nortel stock or putting it all into one or two stocks. And what happened after that, because again, no one was coming to me for my advice or my opinion because they thought that they could, they were making 20, 30, 40, 50% a year over a short period of time. They weren't seeking advice. And then the market crashed and the bubble burst and people lost homes. Their retirement portfolios dropped by 70, 80. Some people basically lost all of their money because they gambled. And all of a sudden, what started to happen? The following year, after that crash happened, was probably one of my best years because all of a sudden people were seeking advice. They realized they weren't able to do it themselves, right? The second time that I noticed that was when ETFs were introduced. Again, I thought to myself, well, maybe this is the end of it, right? Because people are just going to go into low cost ETFs and that's all how they're going to invest and do it on their own. Well, then you had the bubble the global financial meltdown that happened in 2008, 2009. And there was a period of time that indexes were down, like people were losing their shirts. And I was really, really busy because all of a sudden I had people coming to me asking for advice. And then the next time it happened, and I'm kind of dealing with it still today, and so are you, Ryan, is when the robo advisor platforms came on board. And I thought to myself, for sure, there's not going to be a need for me anymore because of these robo advisor platforms. Well, now, Ryan, what are you and I experiencing? We're experiencing many clients in their mid 30s to 40s now reaching out to us seeking advice because the self-directed providers didn't provide advice. That's why it's cheap, right? That's why you pay very little in fees because there is a cost to the advice. That's why the ETF investors were starting to come back working with advisors. That's why the robo investors were coming back to us because they weren't receiving any type of advice. And then the other danger, obviously, is the social media, which, funny enough, you and I are on. We're not giving advice necessarily on social media. We're just basically saying, hey, here's some ideas. And if you like what you hear, give us a call. And then we'll go through the proper plan to determine if any of these strategies are right for you. But now we're starting to see people come back to us seeking advice. Anything you want to add to that?
Well, I was just going to add that now we're seeing, younger generations seeing the struggles of their parents go through those cycles and not receiving the right advice at different important points. And again, I talk a lot about this in coaching and the psychology of it with clients is like, the learned behaviors that we have and the support that we have around us. And if you don't have the right team around you, just like TVH Group, if you don't have the right team around you, you're less likely to reach your goal and sleep at night. That's a common theme that happens with a lot of the dialogue that I have with clients that have obviously worked with TVH Group in some way, shape, or form, whether it's mortgages, accounting, legal, things like that. But I'm finding more of the younger generation coming. I guess I'm kind of the younger generation, Goonies for life, but a generation that is accepting and asking for more help and asking for professional advice that is very singular about them, right? And again, the robo advisors, all these things don't offer. They're very generalist when it comes to the advice. There's a time and a place for it that can help you get to a certain point, because some of them do great jobs of everything that we talk about, which is like automating, right? That's all it is automating your regular putting away money for yourself for your goal. So this younger generation is looking for more of that individualized guidance, and they're getting it from our team as a whole, because you're not just getting my advice, you're also getting the advice of all the other people as part of the team, because we share ideas, things come up, changes in laws happen, all these things make it more personalized for each individual. And I still, I still love the idea of looking somebody in the eye and being able to ask them a direct question instead of going down a rabbit hole. And I'm sure we've all gone down a rabbit hole of who is that actor in that movie? And suddenly, next thing you know, you're looking at something completely different. So, that's a behavior that I've seen more recently happening with a lot of people, especially younger people, and being able to seek out the advice and find the help that will help them reach their goals that they've seen a generation before or two generations sometimes struggle with. So
It's not even just goals, Ryan. I mean, my experience right now has been, because it's difficult for a lot of them to really plan for the next 20 or 30 years. What I'm finding with the younger generation is they're trying to filter through the noise, because there's a lot of noise out there, right? So,
absolutely.
for example, baby boomers, Gen X's, which I'm part of, and I believe you're part of as well.
I'm a
Yeah,
blend. I don't know where
I
I
know
am.
that I am. But typically, we were raised where we went to a professional for advice, right? So I think like 80% plus of baby boomers, Gen Xers went and actually seeked advice and were willing to pay for that advice. They valued it. Right now, um, I think 59% of Gen Zs and 49% of millennials are now starting to looking for guidance. I believe that's actually higher than what it used to be. I think those numbers were a lot lower. But I think as those two generations are starting to get older, they're starting to realize they're being bombarded with a lot of information, right? It's on their mobile phones, on their tablets, computers, social media profiles. They just really don't know what to do, because here's the thing too is they will listen to TikTok, an advisor on TikTok, for example, rave about something, and then they scroll, and that person, the next one might be contradicting what the first person said, right? And then they scroll, and there's different information. Or Canadian viewers are looking at something that's US based, which doesn't apply here, right? So I think that's part of what's happening now is I think they're just overwhelmed with all the information, with the information overload. They just want guidance from someone. They want a coach, right? Help me get through this. Help me get through this today, because I'm afraid. I'm afraid of the interest rates, and that's kind of cleared up a little bit. We were dealing with inflationary pressures. They were afraid of that. Then it was like the next thing, which was the tariffs. They're concerned about that. Now they're thinking, well, what's the next thing? What's the next thing around the corner? Where I think we went through a good 10 years or so, real estate in Canada was on fire. The markets were on fire. Interest rates were at an all-time low. Like there wasn't a what's next around the corner that I have to be afraid of. It was what's next around the corner that I can get into to make more money, right? And we've hit that wall now, and things have changed, right? So it's up to advisors like you and I to help guide some of these clients and these individuals. And now they are seeking advice, right? More and more of them are. And you get what you pay for. That's why there is that saying. So you want to go somewhere and they're going to, advertise their low cost, whatever else. Guess what? That also means low service. You're not going to get any advice. You're not going to get any guidance. So if you want that guidance and that coaching and the experience of someone who's been through it many, many times, you're going to have to pay for it one way or another. Either you're paying it directly to the advisor, you're paying it by way of some kind of service fee, right? Or it's coming from the compensation model that the advisor provides. But you are going to pay for it one way or another.
Or by not making that decision, you end up paying for it in 15 or 20 years' time because you're that much further behind than those who sought the advice and those who
Exactly.
surrounded themselves with a great team that could help and guide them and support them and coach them. So, yeah.
Yeah. Now, 45% of investors, they report that they're dealing with increased financial stress. And again, I think it has to do with all the uncertainty, right? So if you're concerned about something, if you're afraid, speak with someone who can guide you through the situation. That's all we're suggesting to people. And those other platforms are just not going to give you what you're looking for.
Yeah. I think that simply answers our question, or what you just kind of said is by seeking the advice professionally can help you. And through that, we can provide an understanding what diversification is. We can provide an understanding of alternative investment strategies. We can create a strategy for you based on your goals to help you get there without having to feel the stress. And time again, the amount of clients that go through our start to finish of us understanding and doing our discovery, walking through a process, creating these strategies for clients. I find when I talk with them, especially some of the clients that I work with, that have worked with you, Jim, for many years, is they don't seem as stressed out as the client that is coming from the bank or the client that hasn't talked to their advisor in 3 years, right? The more engaged the client is, it's. I think we often say this with our clients when we start working with them, like this isn't one way. It's a tour that swings both ways. That we're trying to provide information and guidance, but also we need involvement from you as the person involved in your goal setting, right? So,
Well, I'm going to use 2008 as that perfect example, right? The reason why I was really busy was first because people were hearing what was happening in the news. They didn't know where to get advice, so they were calling me. My clients were calling me and were needing guidance, and I picked up the phone and I met with a lot of the clients one on one. What was also happening too was, unfortunately, a lot of advisors were not picking up the phone. They were not responding to clients. They didn't know what to say, what to do. And there were people who had advisors who were sitting there thinking, well, I haven't heard from my advisor. It looks like the world's on fire. I don't know if I'm going to lose all my money that's sitting in the bank. I need to speak with somebody about this. Right. And I made myself available and converted individuals into clients of mine because I picked up the phone. Right. And that came from, and I shared this story before, where during that period of time, Carol and I would watch the news before going to bed. And on global news, they announced that we were probably heading into a Great Depression, and it was going to be worse than the original Depression that we all know of, right? And I remember her freaking out, going, "That's it, we're going to lose everything." And my response was, "Well, why do you think that?" "Well, because the news just said that that's what's going to happen." And then I kind of walked her through. I walked her off the ledge a little bit, right? And I'm like, "Well, here are the major differences from what happened in the depression of the 1920s, I believe it was, 30s. Here's what happened there. This is what we're dealing with now. We're nowhere close to that situation. We might be in a deep recession, and I think we ended up being in a deep recession. But we're not going to be in a deep depression. And then I thought to myself, well, if my wife, who knows this is the business that I'm in, is reacting that way because of what the news said, what are my clients feeling? How are they reacting? So I needed to make myself available whenever someone called or emailed looking to meet with me to walk them through the situation, right? And many of them came out of it unscathed because they just waited, they held on, and they were okay about a year and a half later, right? And not only that, because of the way we structure their portfolios, we weren't heavily invested in a lot of type of investments that offered a lot of volatility. So even though we were down, we weren't down as deep as the average individual. So the recovery was that much quicker. That's part of our philosophy as well, right? Um, so let's talk a little bit about the paradox, Ryan, because you
There's a
have
paradox.
Canadians. There's a paradox. There's Canadians who are afraid of the tariffs that the U.S. is placing on Canadian goods, and yet 85% of investors support retaliatory tariffs, even if it hurts them financially. So it's funny. They're afraid of what Trump is doing, but yet 85% are saying, well, let's do the same thing, right? I don't know if that's really going to make anything better. I think that's more a revenge thing. I think it's more of a, roll up your sleeves and put up your dukes and let's duke it out and see who wins at the end. At the end of the day, none of us are going to win, right?
Yep.
Because
Yep.
if we now start to put tariffs on American made goods that we rely on, and there is no other alternative, well, then we're going to be paying 25, 30, 50% more for that same good because of the retaliatory tariffs, right? So I definitely don't envy the Canadian government to try to navigate through this battle that they're in. It's not easy. It's difficult to say, well, this is the right thing to do. Uh, I don't know if retaliatory tariffs is the right thing to do. I just think that's more of a let's just fight back, right?
Yeah. And again, as we're squished between both the Canadian and the U.S., 4th of July, obviously part of it has to do with the sense of patriotism that plays into the emotion. Again, I wonder what the tariff on the Toronto Maple Leafs Stanley Cup win will be. So, if they ever get the cup back, besides it sitting down the street at the Hockey Hall of Fame. So, maybe we should move the Stanley Cup somewhere else. So they have a better chance of getting it instead of being able to walk down the street to see it. So
It's already in Toronto, so they don't, so we don't have to pay any tariffs when we win it.
yeah, I guess.
It's already there.
Yeah.
All right. Well, let's talk about some age related concerns. So, 41% of those aged 45 to 60 expect their finances to worsen as well. So, there's a lot of doom and gloom, right? And I'll be honest with you, I'm in the industry and I have an understanding, obviously, of how a lot of this works and how to kind of navigate through all this. But if I'm going to be honest with everyone, I kind of have that sense of doom and gloom a little bit too. And one of the things that I've tried to do, like before every night, before dinner or during dinner, we'd watch the news. I think I turn on the news maybe once a week now because it was just all negativity. Um, and trying to scroll through and whatever else, like there's just so much negative information out there right now. It's not necessarily negative data, just negative information. You can't help but to feel that there's this dark cloud over our heads, and how do we get through it? So if I'm feeling that and I have an understanding, like I can't imagine what everyone else is feeling. So, and right now, 41% of those age 45 to 60 are feeling like things are going to get a lot worse, right?
Well, again, instead of looking at the negative, we could look at what about the other 59%? What percentage is just feeling neutral and just gonna, as we're gonna talk about, wait and see, and what happens. For some individuals, they look at this, especially when I'm sure there's a quote that I can't think of right now, but during hard times, there's great opportunity, right?
Mm-hmm.
To overcome, to educate yourself, to be able to grow, to take advantage of some of the ways the market has reacted to it. And there's a lot of people that, as my son and I, my son will now jokingly say he owns a percentage of the New York Rangers because he bought stock today.
Right.
But again, I am not a security advisor, so I can't recommend stock out there. But it's something he enjoys, which is it was the only real hockey team that he could invest in right now. But look at it as a way as an opportunity to come out on top because of the way the market has reacted over the last little bit.
Yeah, and I
know
think
Warren
too,
Buffett is laughing right now.
yeah, I think, in terms of the responses too, and I'm looking at some of these numbers, and I would caution people from these knee jerk reactions. I can understand about we're Canadian and we're going to fight back and all those things, and elbows up and chicken wing and all that, whatever else saying that they have it there. But right now, investors who went through the survey, 44% of them plan to buy Canadian stocks, basically just Canadian
Yep.
stocks, right? The problem with that is 3% of, or Canada represents 3% of the global marketplace.
Economy. Yep.
Yeah. So if you are putting all of your money in the Canadian basket, you are taking a lot of risk, even though I know it's in our own home, in our backyard, supporting our own country or companies and whatever else. But I think you're hurting yourself long term by implementing that strategy. Just like 10% plan on selling their U.S. shares, right? Well, the S&P 500 has been on a run. I think we've just recently hit record highs. So to pull out of the U.S. stock market just because you feel like it's some form of payback, you're going to hurt yourself financially long term. All right. So all I caution you to do is just reconsider some of those decisions. I understand being patriotic. Again, Ryan and I, we're very proud Canadians, but you also have to consider what is in your best interest long term, right? From a financial point of view, right?
Yeah.
And
And
then
part of
Ryan,
the
you were saying,
article, sorry.
oh, go ahead. No, go ahead.
Well, I guess part of the article goes on to say, 46% were taking no immediate action at all. And taking no action is a decision, but it could be the wrong decision. And what truly does that say about investors and the psychology of investing and people's true understanding? And again, it links back to everything that we talked about before. If you're planning on sitting by the sidelines and just waiting it out, how is that going to affect your overall portfolio? How does that affect your goals? How does it affect you planning for the worst situations? Again, we came out of this whatever market that's going on. We came out of COVID, the housing market before that. Like, how are you preparing for each level? And are you talking to your advisor, as our clients do, of layering in strategies to minimize the stress and minimize the up and down feeling of uncertainty, and being able to reach out to a valued, trusted advisor that is going to be able to well, for us, definitely calmly walk you through the situation. I know if you have an advisor that doesn't calmly walk you through, I'd say come talk to us. So,
well, going back to the not taking immediate action, so 46% are saying they're not taking immediate action. We have to provide some context behind that, because if they're sitting on cash, not taking immediate action, and they're kind of just sitting back, and then you're right in what you just said. But if they're not taking any immediate action, they're invested based on the goals that they set out 12 months ago, 24 months ago, and those goals have not changed, then I would say that percentage should be higher. It should be 100% should just sit there and kind of ride through based on their original goals that they set out. If their goals have changed, that's different. Make your adjustments, right? But if you're sitting in a portfolio with a 30-year time horizon, and you've structured a certain way before all the tariff talk and whatever else, and you're just going to sit there and kind of ride it, that is the right thing to do. Is just to not a knee-jerk reaction, right? So a little bit of context behind that. So Ryan, for the advisors that are out there, this is a great opportunity for wealth advisors, basically financial professionals, right? Is to make themselves available to people who thought that they can do it on their own, believe that they can do it on their own because, again, from the marketing point of view, advertising, talking to their neighbors, whatever else, and they quickly realize there's a lot more that we just don't understand. Because here's what I will say, Ryan, you and I think when a client meets us and they have a series of meetings with you and I as we walk through the process, they may believe that we've only invested a total of 3 hours of our time, right? That's what they might think. So, in someone just typed in their Bitcoin.
Bitcoin. Yeah.
Yeah. No. So, no. So people think or assume that you and I they've spent 3 hours of our time with them, and they're paying whatever fee it is with the portfolio or whatever else, and they feel that's too much. But do we just spend 3 hours of total time with a client? No, right? Like you
Absolutely
and
not.
I, no. I mean, part of our day is we are in meetings with multiple clients. We are in meetings with other investment companies. We are constantly learning. There's webinars, there's conferences that we attend, there's literature that we have to go through. There's know your product requirements that we have to satisfy. Like our days are not 3 hours or 4 hours and we relax and sit. Like it's nonstop information. That takes a lot. Like we are building our skill set, we are improving our skill set, we are staying informed. I remember 2 or 3 years ago when we were dealing with the interest rate environment and the inflation, and I think I shared this story. I had one day where I had three separate meetings with three separate economists that I was listening in on. Each one was about an hour and a half at a time. And I remember the first one I listened in, spent an hour and a half, and at the time they were saying, we're in a recession. And here's why we believe we're in a recession. I'm like, okay. I finished that meeting after an hour and a half thinking, well, we're in a recession. I have to prepare for that. Second meeting was an hour and a half with another economist, sat in that, and they're like, we're not in a recession. We're probably 2 weeks away from being in a recession. Here's why. I'm like, okay, well, that kind of felt a little bit better. The third one, another hour and a half meeting. Yeah, we're not in a recession. We don't think we're going to be in a recession. We might kind of like, straddle the line, but we're going to be fine. Right. So what you and I do is that was 4.5 hours of listening to three different economists presenting their case. And then your job and my job, our takeaway is, okay, well, let's gather all that information and which one is the most probable, which one's the most reasonable one. That's part of the challenge that we face, right? Is everyone has an opinion. So you and I have to filter a lot of that noise. That's part of our job, right? On behalf of our clients.
And well, again, as far as filtering and stuff, just commenting on, thank you very much for putting in the chat Bitcoin. If you're going to decide anything, again, as we said, layering in, never to putting all your eggs in one basket. It's okay to buy certain cryptocurrencies, but know and understand what you're getting into when it comes to, again, the educational piece of what they are, how they work, what is good, what is just wasteful. I know
What's a scam?
for a large,
I mean, what's a scam, right?
yeah,
Like I just had a client. Sorry, Ryan. Late last week, they emailed me like, "Hey, can you give me some advice? We invested a little bit of money into Bitcoin. We're being contacted by this person. We have no idea who they are, saying that it's we put in 300. They're saying $300. They're saying it's worth $200,000, and in order to unlock it, we have to pay X amount or do these things." And I've had other people who fell for that as well. So they reached out and they're like, "What do you think? Is this legit?" And I spent time doing a little bit of research. They provided me with the information. I was able to go back to them and say, this is an absolute scam. Here's all the backup information, right? It was time that I had to take out of my day because there was a bit of a time crunch with it for them, because they had a meeting scheduled with this supposed individual, right, that was going to help them unlock this $200,000. So I had to set time out of my day to go through. I didn't get paid for that, right? But I was able to provide information to my clients and prevent them from basically being defrauded. Like, that's part of our job as well, right? I don't know how many times I get articles from clients, hey, this sounds like it's really, awesome. What do you think? And within seconds, I can tell that it's a scam, but usually I can identify it's a scam, do the research, and then get back to a client. Well, again, that takes time out of our day to do that research, to go back to the client to say, yeah, this is not legit. So stay away from it, and don't click any links on the article, please, right? Because they will start getting into your bank account and scamming you, right? So went on a bit of a rampage there, especially with the Bitcoin, just because I've known too many people who have been scammed by these situations. So just be careful. And is Bitcoin a bad investment overall? I'm not going to say it's a bad investment, but if I look at what Warren Buffett says, it doesn't produce anything. As a savvy investor, he invested in businesses that had cash flow. It produces something, right? And that's how we like to invest or make recommendations with a lot of the referral partners that we work with, is they produce something, they make something, they generate income. That's part of the model, the business plan with the investments that people invest in. So that works for our clients. It's not for everybody. So any final thoughts, closing thoughts, Ryan?
Obviously, hopefully this gave some insight to obviously the tensions and the tariffs for a lot of people. Again, seek the professional advice, and instead of just, unless you're my neighbor or Jim's neighbor, don't rely everything on what the local neighborhood person's saying, but find, as I say to my son often, find 3 sources of solid information that can help support making the right decision for yourself, and that it can really obviously help you achieve whatever goal you might have.
So if today's episode hit home, we encourage you to share with a friend who's feeling some financial pressure, and I'll guarantee you're going to have a friend or two that are dealing with some financial pressure. And don't forget to subscribe for more insights on mastering your money mindset. So no matter what the markets throw your way, we're here to help you. We're here to guide you through, to coach you in helping you and make some of these decisions. So reach out to us at tvhgroup.ca, tvhfinancial.ca, all of our social media platforms. Email us financial@tvhgroup.ca, or even call us 647-727-4668. Yes, we do have a phone line, and yes, we will speak to you. You will speak with a human if you want to speak with a human. So until next time, I think, Ryan, next week we are going to be introducing a new member to the team, right? So I'm really excited about that as well.
Yeah, putting him in the hot seat. So
put him in. Yeah, I think he can handle it. So, so once again, thank you everyone for listening and watching. And until next time, we'll talk to you soon. Take care.
Why is it me? Why am I God? I still buy